Good afternoon and welcome, everybody. Thank you for registering for today's webinar, which is all about the future of hotel finance and driving value with the Uniform System of Accounts for the lodging industry, commonly known as USALI, the new version 12 and the standards associated with them. My name is Jane Pendlebury. I'm the CEO of HOSPA. It's 2 p.m. and it's Tuesday, the 25th of February, 2025. I'm not in my normal office today, but taking advantage of some hospitality from a very lovely central London club. We're due to be chatting for around 30 to 40 minutes today with time for questions at the end, but please do ask your questions throughout using the Q&A option, which is probably at the bottom of your screen. If there's not enough time to answer the queries, then we will get back to you afterwards. I'm delighted to be joined by Gareth and Neil so far today, and we are hoping that Mark will join us very soon. But they're here today to talk about the implementation of the USALI, and I'm going to hand over now to Gareth, who is going to introduce himself and your fellow presenters, please, Gareth.
So, thank you, Jane, and good afternoon, everyone, and thank you for joining us today. So, as Jane says, I'm Gareth Hawkins. I am an account lead for hospitality here at Workday, and I look after all things HR, finance, and planning. And I'm joined by Neil Gribben, a VP of Finance at Belmont Hotels, and as Jane said, hopefully Mark Alexander at Kainos as well. And firstly, I'm going to kickstart today's session with what we've been hearing from the industry. But just to focus on the agenda, we, as mentioned, are going to go through what we're hearing from the industry and finance leaders within hotels. And then Neil's going to be addressing some of the key changes and challenges that we've seen from USALI 12. And then there's going to be more of a discussion around how technology can support USALI and the future needs of hotels, and a cheat sheet approach to that. But as mentioned, these are the people that are going to be conducting the webinar today, and I'm just going to kickstart with the sort of hotel industry insights and some of the challenges that we're seeing within the industry. And I'm not going to focus too much on the headwinds, because I think we could probably spend about 10 minutes about everything and all the challenges the industry is facing today. But what's interesting is that we did conduct a survey to financial leaders within the hotel industry, and some of the key results that we identified were, what was interesting is that technology ownership, and a striking sort of 60% of responders reported that their IT departments control their software roadmap. And that creates quite a disconnect between finance needs and technological solutions. And additionally, sort of system updates occur infrequently, and that leaves finance teams working with outdated tools and being able to address some of those ongoing headwinds that we all know about and that the industry is facing today. And then secondly, we're seeing a significant automation gap. So everything at the moment that we're speaking about financial leaders is all about addressing automation and focusing on how we can reduce those manual approaches. And what this has an impact from a finance perspective is that 80% of hotels reported that their period end close takes over 3 days, while 60% are still heavily reliant on Excel for reconciliations. And even more concerning is 70% have indicated that data backup or batch process takes overnight or even longer. And so lastly, there's a real pressing need for better data access. And that could be employee data, operational data, so your PMS or loyalty, which can help supporting sort of strategic planning capabilities. So half of our survey professionals reported difficulty in creating what-if scenarios, while 60% lack easy access to data for decision making. And in an industry as dynamic as hotels, this is particularly sort of challenging. So, what we want to discuss here is how we can look at best practice and utilizing modern technologies. And we've seen customers have great return on this financially, as well as being able to sort of focus more of their time on strategic ways of driving revenue for their business. And look, I'd love to spend more time highlighting sort of more of the technology can support this, but that leads us sort of quite nicely into sort of more the stars of this webinar in Neil and Mark, who will be talking about the challenges and what's come out from USALI 12 and the need to access more data to address some of the key requirements that have been added. And yeah, hopefully that'll bring you back to yourself, Jane, so we can introduce Neil and hopefully Mark as well.
Yes, well, let's hope Mark joins us. But Neil, would you like to go ahead and say who you are? And
Sure, yeah. Sure. Thanks, Jane and Gareth. So just to recap, my name is Neil Gribben. Pleased to meet you all. I'm the VP of Accounting and Control here at a company called Belmont. Some of you may or may not know of us. We are a subsidiary of LVMH, which is Louis Vuitton, Moet Hennessy. And I've been here for about 15 years, and prior to that, I had a long career with both Hyatt and Four Seasons. We have about 45 hotels, trains, safaris, and river cruises in about 25 countries. We have a few businesses in the UK. We own Le Manoir Quatre Saisons. Some of you may know it. And we manage a hotel on Sloane Street called the Cadogan. And we own two trains, the Royal Scotsman and the British Pullman, and soon to open our third UK train, the Britannic Explorer. And we also own and operate the Venice Simple and Orient Express. We mostly own our businesses, but we do have some management agreements and some joint ventures. And believe it or believe it not, we are also a customer of Workday and Kainos, hence the link. So my kind of role here today is to try to help navigate the USALI 12. I'm old enough to remember quite a few of these. This is I think in my lifetime, maybe the fifth or sixth or so. Certainly, I've been implementing 3 or 4 of them. There is a code here if you want to scan it and get a discounted copy of the book. There are also many videos and other pieces of information online, which I'm sure some of you may have not seen. Maybe may or may not have seen. Maybe Garrett, you can just flick down the slide there for me. So just to give you a little introduction before we hop into what 12 means, just to give a bit background about the whole USALI concept. It was originally written, the first version, 100 years ago next year, so 99 years ago, by the New York Hotel Association. And we're very lucky that there is such a standard. And I guess it was and is in existence because of the prevalence of management agreements in our industry and this relationship between owners and operators. And it provided a uniform or consistent approach to accounting and therefore calculation of management fees initially on a US basis, but over the time it's become much more global in its language. A version is approximately every 10 years we have a new version. This one was just released at the end of last year, and under the rules, they say it should be adopted by 1st of January 2026, which means that those of you who are in the same position as myself will need to get this up and running for the budgets that we probably do, depending on your calendar, but that we will be doing this autumn. So there is a need to for us all to get moving, and we're right in the window now, I would say, of doing what we need to do. A few other things just to point out. There is just one sentence on page 13 of the book, which basically, and I'll just paraphrase it, it says that the format and technology must be followed to be in conformity with USALI. So if you have management agreements, the vast majority of them will reference USALI, and they will say that you should be compliant, you should be following it. And what HFTP say is that if you don't follow it all, you don't follow it at all. So it means that we don't really have an option as to which bits we like and which bits we don't like. Although personally in here at Belmont, we kind of make an interpretation about certain things. And I kind of follow the logic that if we are able to extract from our systems what USALI wants, then sometimes I'm happy to present it in a slightly different format. For example, we don't put the rooms segmentation, which is quite lengthy, or the breakout of rooms labor that are sort of identified with in USALI on the same page as the room statement, but we do put them on other pages as an example. So let's just flick into to just understand. I divided this up into kind of two groups. We've talked about the most significant changes, and then we'll talk about some of the less significant changes. Some or all of you may have flicked through the book, and I'm assuming that really the audience here today is migrating from 11 to 12, not that you've never used it before. So we're really going to focus on the changes. If you haven't used it at all and you've never heard of uniform system before, I mean, we do strongly recommend. Sorry, I would personally recommend, it's my own recommendation, that you have a serious think about it. In addition to just being uniform system, our approach to our chart of account, it also kind of standardizes a lot of our policy for how we'd operate from a financial point of view within the business as well. It means you don't need to go off and write the same policy yourself, so to speak, because the book forms the basis of a lot of what you do. So the first, these are the 6, I would say, main changes from 11. And not all of them apply. About half of these apply to all of you, but some of them don't apply to many of you, and some of them don't even apply to me. So the first one is about lounge operations. So this is if you have I used to work for Hyatt, and they would have what they call a gold passport floor, and you'd have a separate executive lounge. And many hotels, particularly those in commercial markets, may have these lounges. So there's a change in accounting for the executive lounge, and it basically means if the lounge is material, I think they define what materiality is, but if the lounge is material, then you need to have a separate schedule for all of the costs that relate to the lounge, summarize them, and then they become one line within the rooms P&L. Here at Belmont, we're quite lucky that we last year sold our last hotel with a lounge, so I don't have to get into the horrible world of creating this allocation. So just watch out for that one. Second one is kind of applies to a similar audience. It's about loyalty programs. So if you have Hilton Honors or Marriott Awards or Starwood Preferred Guests or Hyatt Gold Passport, whatever these programs are, there's enhanced reporting for this as well. So a line has been added within the rooms P&L to aggregate the costs for this program. So that's fairly straightforward. It would just mean that you'd need to be changing your internal allocations of how you're actually programming those costs to come across to this line. The next one does affect all of us, and what was formerly known as the utilities department has evolved into what is now going to be called EWW, or energy, water and waste. So this is a nod to our ambition from a sustainability point of view. So a few things here to just highlight. One, the waste is being moved from what was previously the property operations and maintenance division into utilities, and then there are a certain amount of enhanced statistical reporting in relation to consumption of these energy sources. And finally, there's a greater breakdown of these lines. So the number of lines I think that existed on the utilities page before might have been 6 or 7. And I think it's about 14 or 15 lines now. So for example, waste is now segregated into landfill and recycled, and a few other captions as well. So a greater breakout within what we'll have to post in relation to the EWW section. Next one is FTE, full-time equivalent employee. So there's definitions, obviously, of what an FTE is. But in addition to that, they make this schedule compulsory. To be honest, we used to have the same or a very similar schedule. So from our point of view, there's not a lot to do here, but they have just made the schedule itself compulsory. There's a lot of, just while I'm on that, there's a lot of wording within the book. They use the word mandatory and they use the word optional. So they kind of differentiate. When it's mandatory, you have to do it. When it's optional, you can still be in compliance with your management agreement if you don't do it. Which brings me nicely onto it, the new annual mandatory brand and operator schedule. So many of us have been asked by our, I'm talking now to the operators, but many of the operators have been asked by owners to tell them how much do we spend on all these brand mandated programs, be they sales and marketing, be they HR, be they IT, be they any other systems that we may mandate that are global. And what this does is that this creates a standardized format. So it's not a monthly schedule, it's actually an annual schedule, which is kind of an addendum to your accounts, which aggregates all of those charges which are mandated from the operator. And I guess it's a way of the operators agreeing with the owners that this is the way that we are going to present this stuff to you on a regular basis. So I guess it's something that you would prepare at budget time and possibly at year end as well. And the final main change, again, this one doesn't affect all of us, and possibly in the UK affects very few, is about all-inclusive reporting. So this is related to hotel businesses which provide packages which include rooms, food and beverage, and entertainment. So your classic kind of Club Med or Sandals in the Caribbean, this kind of a holiday where everything is effectively included in the room rate. And what it does is it splits the costs remain the same, i.e. the rooms cost remain in the rooms division and the food and beverage costs remain in the food and beverage division. But on the revenue side, it basically splits the revenue differently. It doesn't put them into rooms and F&B. It categorizes them, I think, as package revenues and non-package revenues. Okay, so it's a slightly different presentation, and therefore when you're looking at rooms profitability and F&B profitability, it doesn't appear the same way as a traditional hotel. So those are the 6 main ones. Just to recap, the lounge, the loyalty programs, and the all-inclusive don't relate to everyone, but numbers 3, 4, and 5 certainly do relate to all of us. Actually, 5 wouldn't relate to you if you weren't, if you didn't have a management agreement, but it would probably be interesting to see anyway. Okay, so Gareth, we have another slide here, just which summarizes the minor ones. So just if you just look across the top row here, this is kind of the way we approached it here at Belmont. We looked at the first 4 are about either elimination of accounts, renaming of accounts, addition of new accounts, or moving of accounts. So it's kind of, we looked at this in a kind of red, amber, green approach. So elimination would be red, it would be gone. Renaming will kind of be amber, that it's a change. The addition would be green, we will be adding a new account, and then moving, I guess would be amber. Could be red as well. It'd be kind of red in one department and possibly green in another department, if you can understand the logic. So there are a few examples. So they say immaterial accounts, for example. They said accounts like printing and stationery in A&G, or laundry in A&G, or professional fees in food and beverage, or music and entertainment in rooms. Like, they're all really minor accounts and really had very little usage on a global basis on them. So they have all been eliminated. And we've taken the action here where what we're doing is we're mapping all of the history on any of those accounts into miscellaneous. And that's, I guess, where we dovetail with them, with Canis and Workday, and how we actually going to make that happen. And then there's a certain amount of renaming of accounts. For example, I think things like direct mail. I'm not sure how much direct mail there is anymore, but direct mail has been given a modern name. In-house graphics have been given a new name. Resort fees, media, all these things, they're actually the same lines within the chart, so they don't require a new number, a chart of account line, but they do require, this was the old name, this is the new name. Then we have the addition of some accounts. So for example, additions would be things like the example we gave already, the loyalty, the cost of loyalty in rooms division. That would be a new account that didn't exist before. They have a new one called service recovery, which interestingly is being charged to A&G. So that's when you have a service issue with a guest and you kind of remediate it. Charged to A&G. the exec lounge I mentioned as well, also in rooms. And then there's a renewable energy line I gave an example of in energy, waste and water, and another one there is digital, various different categories of digital spend in sales and marketing. So I haven't listed them all here. There are many more, but there are kind of in my mind, I look at them 4 ways. So elimination, renaming, addition, and moving. A few other things to watch out for. There's a new market channel report, and it's, as opposed to market segmentations, it's market channels are the channels of distribution, and it's what they call optional. Okay, so it is standardized, but it's optional. You don't have to do it, but it's recommended that you do it. I would highlight with that one, if you make the change, it generally may impact your interface with your property management system. So whenever it comes to segmentation, our geography, our channel, we always have to, while we have to true up what we're doing within our accounting software, our budgeting forecasting software, we also need to make sure that that's mapped, or the data that's where it's originating from within the PMS is aligned and making sense. What used to be called fixed charges, which is below GOP, has been renamed into non-operating income and expenses. Okay, so the clue is in the heading there. It now includes some incomes, which it didn't previously. Previously, it was just fixed charges, and it has been expanded. So, for example, lease income has been added in this section. A line called pre-opening has been added. Pre-opening as a line never sat anywhere before, and I think we all probably handle that slightly differently. But now they're saying there's a standardized way to deal with that. A few other things. Rent has been updated in there in relation to IFRS 16, and also unrealized investment gains and losses have been added. Quite a lot to read, I would say, under that non-operating income and expenses schedule section. HR, which is a line in A&G, has been split into 2 accounts. I think historically we did have a sub account hidden in our chart, but now it's saying 2 lines appear on your P&L. One is called HR recruitment and relocation, and the other one called HR employee relations. Similarly with digital in marketing, it's been split into a number of accounts. We also find with this uniform system, or certainly I found every edition of uniform system, marketing tends to get a fairly major overhaul as the industry or the methodologies kind of evolve. And in this case, digital is now split into paid search, display, and social. So a lot of new accounts to be added there. I mentioned the pre-opening account. And finally, there's a lot of clarifications in relation to deferred tax. I mentioned the gains and losses already, and the lease accounting. Also, there's a section on government subsidies. To be honest, the government subsidies, when I read it, it's very much North American centric, and I'm not sure how much it will relate to those of us. And it really goes back to COVID. It's kind of been written a bit late for what we all had to deal with when we were getting when COVID subsidies were being given out. I think it probably readies us, unfortunately, for the next time something like this may happen, but it's probably a little bit late to deal with anything retroactively. So they are the main, the 6 major, and then I would say on this page I have 10 smaller changes. This is no substitute for reading the book. There are many other changes there, but these are the kind of, I would say, understanding these, you get good grips of what's going on. I would suggest as well, so I didn't mention this, but in the at the beginning of the book, there is a section which is basically summarizes. I'm just trying to look at my notes here on the page, but there is a section at the beginning which summarizes the main changes. And I would say, if you're going to open up the book, you buy a copy, you get the digital online. They are the first pages that I would run to. I think it starts at about page 11 or something like that. Okay, just a few other, as Gareth mentioned, in relation to cheat sheet, just our approach, and this is, this is kind of after we read the book here, and this is kind of our internal document here, right? So after we read the book, and we had a kind of a team who kind of read it, and we had a task force, and we got together and said, okay, what are we going to do, right? So the first thing is agree on what changes affect you or affect us. So in this case, we said, listen, we don't need to deal with the lounge, we don't need to deal with the all-inclusive, etc. So there are certain things which you can discount and say they're not relevant because they're not part of your business. The segmentation, even though that didn't change, I wanted to use it as an opportunity with our revenue management team to make sure that we were perfectly aligned between what we have in the PMS and what we have in the ERP. We've done that, and we're okay. The segmentation was aligned, but the wording or the names that we're using were slightly askew. So we need to kind of align the names that we use. Similarly with channel reporting, and those two are again, if you're not doing it, they can be very difficult because it's very cumbersome to push the change from the uniform system through your accounting system and then back into your PMS or the other way around. That certainly would be probably one of the more delicate things that we have to do because it involves much more people. And we had to decide on how we deal with all-inclusive. We don't have any all-inclusive hotels, but we do have all-inclusive trains. And luckily, there's no such thing as the uniform system of accounting for our trains. But we do try to mimic it or copy it as best we can. So we had to make a call on how we're going to deal with that. And the last one is SAF, which is our safaris, which we've 2 safaris, and both of those are all inclusive as well. So they don't really fall under the uniform system, and luckily they're all owned and not managed. So we were able to kind of navigate that in our own way, and we will do. But that's kind of just unusual for us. The new EWW schedule, there's a lot of new accounts there on that schedule. I would say that's the one of the longest sets of changes in this uniform system. Probably fairly easy. Not just the accounting needs to change and the reporting, but also how you collect it, how you collect your units. We never had to worry about, I don't know if it's tons or kilos of renewable waste, recyclable waste before. We had waste numbers, but we didn't have, we hadn't categorized it. So a little bit of work has to be pushed down to the teams about how you're going to accumulate that data. Ensure accounting rules are followed by all. Again, that didn't change in this version, but just as an opportunity to make sure that we're aligning with the book, that we're following the package accounting rules, which are not straightforward. Yeah, they're relatively complicated, and you need to kind of review them every now and again. So you can see from some of the things I've written on this list, we're using the opportunity of 12 to just make sure that we were aligned at 11, if that makes sense as well. Similarly with our allocations for laundry, meals and housing, and benefits, and then the FT formula. Our own formula that we have been using is slightly different to the uniform system, because they didn't have a definition in here before. We created our own definition. Now they come along with a definition which effectively trumps us, and they don't. We have been removing public holidays and vacation days from the number of days that an FTE works, which means that we would end up, when we do the calculation, having more FTEs in their formula because they don't remove it. So we have to make a call on how we deal with that. FTE report I mentioned, and the brand operator schedule I mentioned. So we had a call on the last one. We had a call with our managed businesses just to make sure that they were all ready for how we were actually going to do this. And we did a mock-up, and we created a report in using Workday, which hangs off our GL and populates that report. I'm nearly finished. I'm going to hand back to Gareth in a second, but just one last slide just to kind of just visualize kind of our approach now. I know this is very, very small. I do apologize for that. So these are, we just screen grabbed 2 departments, the rooms department, or the rooms division, and the F&B division. Okay, so rooms is probably kind of easier to see the colors here because they're different. But using our red, amber, green approach, we've tried to decide, well, what are we going to do here? So all of the red accounts, I'm just reading up from the bottom: royalty fees, music and entertainment, and God bless me, I can't get the last one there. We are deleting the bottom 2, and the top one we are moving. Okay, so the top one is getting moved to another department. So they'll all be migrated out of here, and the bottom 2, what we're doing when we delete them, our strategy is that we will merge the history with miscellaneous. Okay, but we won't have them available to budget in 2026, and they won't be available to to post there either. The green ones we are adding now. In our case, executive lounge and loyalty programs are not relevant, but for many of you they may be, so they would be added. And then the amber ones, are actually similar for both rooms and for F&B. But what I've really said here, so for example, we show total rooms revenue as one line, and I've said to the right of that, I said see segmentation schedule. So we may get beaten up by HFTP for not breaking out our segmentation on this page, but I'm just going to break it out on a different page. I break it out, we break it out using rooms occupied, room revenue, ADR, guests. So there's lots of schedules, and it just wouldn't fit all in here. It would just make this very, very cumbersome. Similarly with salaries, non-management, if you look at the USA, look at 12, there's a big blowout of that by department, by sub-department within the rooms division. We've chosen to show that elsewhere and not to show it here. And then the other two, I think, just have minor renamings. So we basically, to do this, I know this looks really simple, but we took the book and we took our existing accounts and we ticked every single line, and on the basis of that we said, well, what's the change going to be? Now, what I haven't shown you here, and what we do have, is to the right of this, we basically have what are we going to do within our general ledger, and what are we going to do within our reporting system, which is a Workday product which is called Adaptive. So within both of those, we are also going to make changes. And I don't know if Mark is on, but that's a good segue into how we work with Workday and with our consultants Kainos to make that all happen, because we have a global accounting system. So we're using the same accounting system throughout the world, and we also have a global reporting system, which we also have throughout the world, which means that we are able to make all of these changes here in London, and then to push them into the system, and then just to turn them on the flick of a switch, and then just to push them out to the world simultaneously. So that's it from me. If there's any questions, I'm sure either after the call or on the call, we can try to help you. To be honest, I don't know a lot more than just reading the book, and I don't think there's a lot more out there than reading the book. And this is a little summary, and maybe it's a bit of a wake-up call to those of us who haven't really focused on what we've got to do. But I do encourage you. There's no substitute for scanning through it. And you can find me somewhere on LinkedIn or somewhere if you do want to ask me a question, and I'll try and help you. Thanks a million, everybody, and I'll hand back to Jane.
Thank you very much, Neil. I've actually had one comment in saying that this was the clearest explanation that they've ever heard about the changes. So there's a compliment for you. But as you say, there's no substitute for actually reading the book. And I have to say, it's the sight of handing a finance director a copy of the book, it's like all their Christmases have come at once. They always seem to be particularly excited about it. The only other question I've had in so far, you've answered. It was about whether you used it across all your businesses, but you did actually make reference to that with the trains and the safari lodges. So you use it in a version. So I don't think I need to pass that one back to you. Gareth, can I hand back to you?
Yeah, sure. Thank you. Yeah, as mentioned, unfortunately, Mark's not able to join the call, but a lot of the focus that we've shared today and Neil's touched on is what we see as our sort of differentiator within the market of creating that single source of truth that Neil alluded to, and sort of aligning stakeholders, and being able to bring in not just finance data into a system, but also people data as well as operational data that is key for identifying some of the classifications that Neil touched on earlier. And what we'd be keen to do, and what we have been doing with the industry, including the likes of Neil, is learning about what's required within the industry and building what we're calling accelerators. And what we mean by that is because we're learning about what data is required and it needs to be accessed from the industry, is that we're building these quick accelerator packages to enable hotel companies to be able to have a system like Workday that enables them to gain access to that data quickly and to run these reports, not just from USALI, but any of the industry headwinds that we face. And hopefully, Neil, you'll be able to sort of support that hopefully the technology and Workday has been able to sort of help support you with the changes with USALI, but all the other headwinds that have been thrown at you?
Yeah, I mean, I'm not here to sell
No.
Workday, but just a few comments. I think, you know, as I said at the beginning, I've put in a few of these over the years, and they've largely been standalone. So we might get a directive from head office and say, here, go in and put it in the book, and then you go and you do it locally. But now we're in a situation whereby I guess we're saving time and money because we're doing it as one team centrally, and then we're taking that decision out of people's hands. Nobody's going to have to change their budget files or their general ledger locally because we'll have done it already. We are lucky that we work with a system like Workday, and there are others, and I'm sure many people on the call are using standardized systems. But I do think it does put us at a huge advantage when we want to push out anything in the to push something down, not just general ledger, but within Workday we push down things like purchase order approvals, or segregation of duties matrix, or other things can be pushed down from on high as well. And I guess the cloud over the last decade has allowed an evolution of these systems to be able to do this job much more easy than before. So but the great example is this USALI, because we're just going to be able to do it in I think my team our plan is we're going to do it in May, and what we're going to do is we're going to do all the systems we're going to close the month of April, and then we're going to do in the live system, we're just going to make all the changes, and when they wake up after we've done that, it's all going to be pushed out and it's going to be ready for the budget, which they'll probably start doing in around about July. Thank you.
Brilliant. We don't have any open questions at the moment, but if you have any questions, do feel free to pop them in. Something that I had, Gareth, for you probably, or maybe Neil, when you use a system like Workday on top of your other systems, does that speed up a lot of the processes? Neil at the beginning mentioned that closing the period can take sort of 3 days or so. Is that something that's going to speed that up, or just make it a lot easier for the operators?
I don't know if that's from me or from Gareth. Certainly from our point of view, it makes it a lot quicker. There's two sides to this, and I guess I'm talking to a lot of hotel finance people here. So first is the close and the general ledger. I think within that, we're able to keep it open, keep it closed. We can lock people out, lock them in, so that we can enforce deadlines, because they know if they don't meet the timing, they're out, etc. They have to knock on the door to get back in. So we've got a lot of version control and all with that as well. Our closing is generally around the 4th calendar day. And it's been very effective, that, because we kind of know what everybody's doing. That's the other thing. We know how everybody's using the system, and we can see centrally where everybody's at within the system at the same time. And the second point is, besides the general ledger, I would say possibly more important, and not more important, but where there has been greater acceleration of speed is on the planning, is on the budgeting, is on the other side of it. So not the backward looking piece, but the forward looking piece. We are able to run budget consolidations. So everybody does a budget, or we do forecasting monthly, we do budgeting obviously annually, we do strategic plan annually. We have instant roll-ups of them the minute that we give them the deadline to close. So we don't have to add anything up. Everything is just, we close them out, we print our reports, or we look at our reports and we have it. So again, the beauty of having, I guess, a globalized standard piece of sort of state-of-the-art software. Took a lot of work to get here. I mean, it sounds very easy now, but implementation and all the rest of it was complex. But we are reaping, I would say, the benefits, and also reaping the benefits of just being standard. Everything being the same makes a lot of life, even the uniform system or whatever, closing, whatever it is, just makes life easy. And I'm sure a lot of you know what I mean. If it's all the same, it's just much easier to just to aggregate it and to work with it.
Brilliant. Thank you, Neil. Gareth, is there anything you want to add before we bring this to a close?
No, just to say really thank you for everyone for joining. Hopefully that was useful. We continue to want to work with HOSPA and its members and to provide best practice. And really the idea of the follow-up to this session is that we would continue that messaging around providing hotel finance leaders with a cheat sheet approach but also a system that is there and ready for them. But if there is a way that, you know, we can support the industry by offering maturity assessments, by reviewing what systems they have currently today, how we can reduce the number of systems that they're managing and how we can accelerate their approach, that's something that we would love to offer to the hotel industry and HOSPA members. And as Neil sort of touched on earlier, I'm happy to sort of take any messages following this, but we'll be looking to follow up this session with the recorded video and some content that hopefully can support all those that are attending this call moving forward.
Brilliant. Well, thank you everyone for listening, and thank you, Gareth, for pulling this together, and for Neil, some really valuable comments and observations there. So that's much appreciated. And as someone said to me, the most simplest summary that they had seen so far, or the most clear. For those listening, please do remember that the opinions and comments presented today are those from Workday and Belmont and the business partners. If you need any formal advice, then please approach your professional advisor or come to me at HOSPA for a referral. We can also make introductions to HFTP, who own the rights to the USALI and are also the publishers of the USALI. You can purchase copies through hospa.org, and there is also a wonderful history of hotel accounting that has been written by one of HOSPA's original founders when it was known as BAHA, the British Association of Hotel Accountants, and that's by Howard Field. If you'd like to have a look at that, that's also available to download from the HOSPA shop. Please take a look at our website for any other upcoming events, and there are many throughout the year. Also on the website, you can find recordings of all of our webinars and masterclasses on hospa.org, and also on our YouTube channel. And this webinar today should be uploaded within the next few days. There will also be a blog about it. So please keep your eyes and ears peeled for that. Thank you for listening. Thanks again to the presenters, and we look forward to seeing you all again very soon. Thank you and goodbye.
Thank you all. Bye-bye.